So happy Saturday to everybody. A beautiful Saturday here. Shabbat Shalom to my Jewish friends. A beautiful Saturday today. And I wanted to make this short, concise, strong sales presentation. I'm all the time thinking, what's the best way I can explain what I do? How can I explain it better? It's not only your tone of voice, how you talk, improving your English and killing your accent. It's also what you say, right? And how you say it in few words. And if you stick till the end of this video, which I'm gonna try to make it short, I'm gonna gift you something at the end for free that you are going to love, okay? And this gift I have for you is related with one of my favorite salesmen in the world. He actually got Guinness records on sales, and sadly he didn't work for the same industry I work. He was Ben Feldman, an insurance salesman. He sold insurance. But one of the things I love, and you're going to learn from him after you finish this video, one of the things I love from him is this statement. I sell money. That's something he will say, and people will be thrilled. How's that? You sell money? Yes, of course. He sold insurance. He worked for one of the biggest insurance dealers in the whole world, and here in New York. And of course, insurance is you are buying money if you get an accident, or if you want to use it to control cash flow or control taxes. I'm not gonna get myself into insurance right now. But what I love of Ben Feldman was this statement: I sell money. And out of that, he was far superior in the way he talked when he was selling, the tone of voice. Many things I didn't learn from him because I'm very straightforward. He was American. He spoke English in a much better way than I speak as an immigrant, right? He was a very, very good salesman, and he sold money. And with time, I took him as a role model, not deciding to work in insurance, despite I received messages from recruiters, even from the same firm he worked for, trying to get me into the business of selling insurance. But what I learned from him was this idea: I sell money. And as a salesman, I start selling different products, right? Right now I'm selling also my book, for example, after I spent 3 years writing it. Right now I'm selling my book. Also, look, here you have an extra recommendation. I'm reading this one, The Art of Short Selling. Excellent book. I'm reading this one right now. But I am also selling my book, Value Investing, Unlocking the Secrets of Long-Term Wealth Creation. And before that, I sold other products from other companies, that they built their product before I built mine. So what I'm trying to say is, with time, I took the role model of Ben Feldman and tried to start selling money. I was lucky. I have the common sense of not putting Ben Feldman in the higher tier, but in the higher tier, I looked and I put in the higher tier the richest man in America. And then I discovered what he was doing. And then I discovered that he did value investing, for many years. And still, until now, he does value investing, despite Charlie Munger, which I hope he rests in peace. After that, he got him into more expensive businesses, okay? Following trends and earnings growth instead of value investing. But what I'm trying to say is, I was trying to sell money. So I looked for Warren Buffett. I learned from him. I learned from other investors. I learned from my boss, which he liked to invest in real estate, sadly, so he didn't have a lot of lessons to give me in stocks. But he wanted to be an investor, and he was an investor too. And that was my story. That's how I started selling money. And that's the reason why today I decided to make this video. This is simply a practice of what I could say to people so they understand what I'm saying, what I am selling. And yeah, and remember that if you stay till the end, I'm gonna give you a beautiful gift. From usually I will have to ship it to your mail, but thanks to internet, I can give it to you for free today. And just stick till the end, and you will receive it, and I will be so happy to share it with you. So okay, I wasn't even thinking to use a board because this is designed to say to people straight to them, you know. But one thing I want to realize when I'm talking with a person, especially right now that my business is taking off and I want to avoid bad customers. You know, when you are already established, when you are Warren Buffett, I don't know, in his 40s, and you have 12 years of experience and 12 years of constant upside, you don't worry about bad customers. You know, nobody can knock you down with a bad review. But myself that I'm starting, I'm very worried of getting good customers, and you will understand what I mean with that right now. I want to realize if you are the kind of person I shouldn't sell investments to. I shouldn't talk about investments. And I will tell you why. Fund managers, especially my type, that we have high margin of safety, we also use diversification. I recommend multiple things. Okay, I invest in packages with multiple stocks. Okay, and I make money not when China does good, but also when the US does good, or when Brazil does good. In my first year, I was an investor in Petrobras. You know, I bought Petrobras at 983, and then I exited that investment, and I was right about my exit at 1511. Okay, I could have sold that at 16 when I was seeing in the news that some professional funds were also selling off their positions. But I bought this at 983. In the middle, I got over 20% dividends, an extra return there, because they release a special dividends. The oil barrel went to 110, I think $100, over $100. So they start making a lot of money. Petrobras produce oil in Brazil. Okay, extracts and produce. So I exit at 511, and now it's available to be bought at 14, around that price. I was right with my exit, and it's still a good business, but this is not an investment recommendation. Okay, my recommendation was at 983. So what I'm trying to say, and that's just a little bit of my story, is that I want to realize if you, the person watching this, are the kind of person I don't want as a client. And I will explain you why. You know, some people, they want you to tell them which investments you like. They don't understand that funds, when we are consolidating our positions, we want to keep our investments cheap. We don't want to advertise those investments. We just want to raise capital and put the money there very cheaply, you know, at a very low price. If I was speaking about Petrobras, I wouldn't be able to buy at 983. I will end up buying perhaps at 1050. Because if I advertise it, the price goes up. And I want the price to go up when the stock is already at 12, and I want to exit at 15. Okay, that's the point when I advertise the investment. No, not when I'm buying it cheap. But what I'm trying to say is that some investors really want you to tell them what's the investments you're thinking about, what's the diversified packages you're promoting. Okay, and the thing with that is that first, the best way to invest in funds is just to give the money to the fund manager, and the fund manager works in your own interest, as in his interest, because he's also investing in the fund for himself, okay, and tries to buy as cheaply as possible. and then he buys multiple stocks in a package. 1, 2, 3, okay, like 6 stocks, right? Multiply that by 10, perhaps we buy 60 stocks, okay? But we go and buy 6, okay? And that's what the fund manager does. But the problem is that I don't want you as a customer, because my job, in case I want to release this information, is recommending you a package with multiple investments. And one of these investments, let's say investment number 3, is going to be the favorite one. The spoiled one. Even is the one that pays more dividends. It's going to be the one that drives you crazy, because you think this is the upside of the portfolio. This is the one that can go up 5-fold along many years. This is the favorite one, the one you feel excited about. So the reason why I want to be the fund manager of that person is because he might be excited about this investment. And right now in my portfolio, I have some investments in China that have crazy growth, believe me, okay? But the person feels excited about this. So if I give you the package, what you do with your money? You go ahead and you put most of your money into this idea. Or you put all of it, or all the money you assign to my ideas, because perhaps you are investing with other people on the side. All the money you assign to my ideas, you go ahead and you put it in this idea. Okay? So then markets, behave as normal. I make a lot of money because I'm diversified. I go ahead, I do my report of 2024, 2025, and I report again positive outcome. Like on the years of Petrobras, I reported an annual return of 73.2. Let's say 2024, 2025, I report, let's say 52% return, 52.5 return. Let's say I do that return. But it's because many of these stocks went up. Okay? So now I can go ahead and report that I'm having positive returns, and all my investors are happy, and all the people who had the common sense of buying the package, they did money because they bought the package. But then I have the black sheep in the group. The guy which listened about my package but got very excited about this idea, or why not he got excited about this idea instead, because it's in his favorite country, because I was recommending an investment in America, and he loved America, so he put all his money in America. So then this investment, from all the ones in the portfolio this year, is 10% down, minus 10%. So now I have a customer that's angry at me, and he's telling me that he's 10% down in their money, and I have to sell him to hold the investment, and to have patience, because sometimes you need more than 1 year, okay? Some stocks take time to take off, but then other stocks in the portfolio, when you are diversified, in 6 months already are up. I have many investments that in 3 months, they were already 24% up or more. In some cases, I invested in things that went from $3.10 to $4.90. Things like that, Some stocks in the portfolio go up very fast. Other ones take their time. So if I get a customer that gets excited about one idea, instead of buying the package, then I have someone talking shit about my advice and saying that I deliver negative returns, when it's not true. When I recommend an investment package that have multiple stocks, and we divide the money so the stocks can cover each other in any downturn case, normally I deliver positive returns. It's very weird that multiple countries and multiple companies and multiple industries, all of them fail at the same time. So what I'm trying to say is that I want to avoid at all costs this kind of customer that doesn't want to put the money in the fund. And also, if I recommend him a package with multiple investments, he's the kind of person that gets excited about one thing and goes ahead and puts all his money in one idea. Or goes ahead and puts all his money in Tesla stock or Apple stock or Bitcoin. You have people that behave that way. They get excited about one thing and they go all in, and it's not the way to go. So when I recommend these diversified packages, I need someone that will listen and will go ahead and buy the package and will diversify, so then I can report positive returns, okay? Or instead, we'll have the common sense and simplicity of giving his capital to the fund manager, so the fund manager goes and does this for them, and at the cheaper price and quick. Because another issue with people that's slow, and this is another customer I want to avoid, another type of investor that I want to avoid, is in this package, diversified, there's one stock that's the favorite, perhaps it's 2 or 3, and these 2 stocks have an enormous upside. Let's say these ones are the one with the highest upside. These ones are the responsible of bringing alpha to the portfolio. Perhaps these other ones have lower alpha, but the more price stability, so I can leverage the portfolio without problems. If I'm leveraging a lot, I want to have price stable stocks that I want to use to deleverage in case I need it. Often I don't need to deleverage, okay? And then the return is higher, okay? But what happens is that these stocks have the highest upside. So if the customer is slow to take a decision, then in 2 months, I recommend the same investment package to a different person, and then these stocks might be cheaper, this stock might be at the same price, but then these stocks might be more expensive. So then with the same money, we bought less of these high growth stocks. So then what you did is that you killed the upside of the package. So when I call you and I tell you, right now the stocks with the highest alpha are at discount, that's the perfect moment to get yourself into the package. Because the price stable stocks, they are price stable. Perhaps they are going to go up at 20, 30%, or pay nice dividends of 10, 12%. Price stable stocks are not going to go up a lot. So if you buy these ones more expensive, it doesn't matter. But if you buy these ones more expensive, it really has an impact on the final result. So the guys that bought themselves early might get this return, but then you get in late and you might have, this return instead, because you bought yourself late into this section of the portfolio. Okay, so at the end, this can't be a sales pitch. This is why the richer get richer and the poor stay poor. These financial products are very hard to be understood. There's many people who can't understand this. So if you could understand this, if you listen to this presentation, to this explanation, and you got it, congratulations. You just need a little bit of common sense and a little bit of extra energy to get yourself in the world of funds and and get into the best funds, so you can start having high returns and high alpha, maybe get 42% a year. This return I got in the last year after fees, it looks like this for you. Okay? But the important thing is that you understand how to be a good customer. Because if you're a bad customer that doesn't diversify, that doesn't listen, that uses me to find a lottery ticket, to find a gamble, in putting all your money in a favorite, please don't call me. If I call you, I'm not going to want to do business with you, because I'm trying to have happy customers that are receiving alpha and positive returns, you know. So that's it. That's basically the presentation for today. And what I promise, below in the video description, you're gonna find a link to my book, but for free, you're gonna find links to 4 tapes. This is an old thing. Yes, it's tapes, but it's recorded tapes on YouTube, which are interviews with Ben Feldman. These were a set of interviews he did explaining why he was successful in the business of selling insurance, and I think it really applies to any person who has a business and want to improve in sales and improve the way they talk and improve how they communicate with people, and a lot of things that Ben Feldman was the best at. And he's the master. I can't reach his level, but the same thing he did, I sell money. That's what I do for a living. And if it's not to you, I sell money to myself. And I'm happy with that. So thank you for watching, and I hope you liked the video today. Remember to subscribe, leave a like, and share. That's the best payment you can give me. Share this with people so we can find more early investors and grow faster and build something big out of this. So thank you and goodbye. Many blessings.